Thank you to everyone who's joined us so far. We are going to get started with the webinar now.
Good morning, everybody. Welcome to the UK for many of the overseas attendees. My name is David Dauber of Cliffe Packaging. On behalf of the business, I would like to welcome all of the industry stakeholders to this webinar, which is entitled UK Plastic Packaging Tax. So with less than 10 months to implementation, we all need to be aware of what impact this new tax will have on our businesses, because we're all in it together. For the sake of our overseas attendees, of which I'm glad to say there are many, the focus of this webinar will be on the UK and will not touch the Eurozone plans. Policymakers in Europe are working on the final details of plastic packaging tax independently of the UK. Details of that tax will be published in due course. So just focusing on the UK, I would now like to introduce you to Martin Hyde of Comply Direct, who would lead this presentation. I will rejoin at the end when we'll have a questions and answers session for about 10 minutes, try and answer as many questions as possible. And I'd like to remind everybody that details of the presentation will be sent to all registered attendees together with copies of the slides. So to Martin, Martin has been working with representatives of the UK government, helping to form and shape this new tax. He has inside knowledge of the detail and is very well qualified to lead this webinar. So without further delay, I hand over to Martin. Martin.
Thank you very much, David. So thanks everyone for joining us so far today. Just as a brief summary of what we're going to be talking through. So we'll touch on the background and timeline of the tax itself in the UK. We'll run through some of the core definitions and then the actual scope of the tax itself. We'll then talk about the liability and the actual costs associated with the tax, as well as how measuring recycled content is expected to be managed. We'll then touch somewhat on the most recent government response to consultation, as well as covering small operators or the de minimis for smaller businesses in the UK. Next, we'll touch on how you can evidence your recycled content. We'll cover registration, returns and enforcement, so what will actually be required to be submitted to HMRC. And then we'll touch on imports, both filled packaging and unfilled, and then how there is access to relief for exported packaging. Finally, we'll touch on data collection at the end, and then, as David mentioned, we will have a Q&A session to finish. If you do have any questions that pop up during the webinar, please do post them in the question pane and we will hopefully get to them at the end. The webinar is being recorded, so a full version of the recording will be accessible afterwards. So getting straight into the background, the UK plastic tax is something that was brought in really with a piece of government legislation called the Resources and Waste Strategy. So this is something that was published back in the end of 2018, and it really sets the scene for the future of recycling and waste management in the UK. The tax itself is planned to come into force from April 2022, so there's less than a year to go, and it will go across the entirety of the UK, so it will include Northern Ireland as well. This is the first attempt of a tax of its kind, where it's a direct material tax in terms of plastic. Now, as David mentioned, there are other European measures that have been put in place, but this tax is solely based in the UK. Now, it applies to any plastic packaging produced in or imported into the UK where there is less than 30% recycled content in plastic packaging by weight. In terms of weight, it is worth mentioning that the plastic packaging must be predominantly plastic by weight to be considered liable under this tax. And it won't apply in terms of the payment to any packaging which contains at least 30% recycled content by weight or is not predominantly plastic by weight. If the tax does apply to an item, it will be taxed at £200 per tonne. Now, the main aim of this tax is to create demand for increased recycled content by taxing a lack of recycled content, and also to minimise unnecessary plastic usage. There is a potential to divert plastics that would otherwise go to landfill or incineration into recycling by adding this value to the secondary material chain. So what about the current standing? So currently, as we said, in 2018, we had the first announcement of this tax. 2 years, nearly three down the line, where are we now? Well, the most recent government consultations on the tax were held between March and August in 2020. It was originally meant to be March to June, but unfortunately, due to COVID-19, there were some delays to that process, so the consultation went on much longer. Government responded to that consultation back in November 2020, and that included their views on the responses they got to individual consultation questions, a draft copy of primary legislation, so the draft document which contains the proposals for the tax, and then an explanatory note which covers some of the minutiae around individual parts of the tax. Other than the explanatory note, there were really only minor changes and clarifications and position reviews from the original consultations, one of which happened in 2019 and then the follow-up in 2020. That draft legislation has now been reviewed by the Public Bill Committee in April this year, and we actually saw a high-level summary of the regulations published by HMRC in May this year. We were originally expecting to see a in-depth coverage to come out in May, which would include specific items that were in or out of liability of the tax, but this has not arrived. Instead, we're expecting this to be released with the final draft of legislation during the summer of 2021. So we're expecting that for Q3 this year. So looking at the wider legislative timeline in the UK, it is important to consider where the plastic tax sits. So back in 2018, when the Resource and Waste Strategy was released, there were 4 policy areas to be considered. Primarily, the UK plastic tax. Secondly, the extended producer responsibility regulations, which is a reform of the PRN system for packaging. Then thirdly, there is the deposit return scheme. So this is aimed at beverage containers. And then finally, a consistent collection scheme for packaging waste collections from curbside. Now, the plastic tax is very different to the other 3 measures in that it's the only one not managed by DEFRA. So DEFRA, the Department for the Environment, Food and Rural Affairs, tend to manage environmental legislation in the UK, with the devolved nations and devolved powers assisting in their respective nations. However, tax is not a devolved issue, unlike waste, meaning that HMRC or the Treasury are leading on the tax, hence it is a UK-wide tax and not individually specific to each nation. As we can see from the timeline, the tax itself is due to come in 2022, around the same time as some of the other measures, such as the planned deposit return scheme in Scotland. And then 2023 will see us move towards the extended producer responsibility and consistent collection for local authority measures. So there is a lot to do in a very short timeline. And whilst the plastic tax is just one piece of the puzzle, it is a very, very important piece because it connects together secondary material markets as well as the overall value of plastic. So what packaging actually comes under scope of the tax? So it's worth leading off here by saying that all mainstream plastics, so all non-novel, non-biosourced, normalized plastics will be included in this tax, as will all compostable and biodegradable materials. Bio-based plastic will also remain in scope of the tax, although HMRC have committed to review this as markets developed, as will all standard plastic types. There are a very, very small limited exemption in terms of material, but this is only for non-chemically modified cellulose polymers. So other than that, all plastics will be considered in scope of this tax. To be taxable, for imported packaging, it would be either empty packaging, which is imported, or packaging around finished goods, which are imported into the UK. And then for UK manufactured packaging, it will be the actual manufacturing of UK packaging within the UK, which will pick up liability. each individual packaging component will be considered separately. So compared to the packaging recovery note or the PRN side of the regulations, where you might consider your total packaging handled and total weight, this instead looks at each individual component. So a bottle, a cap, and a label would all be individually recognized and individually considered in terms of their liability under the tax. In terms of multi-material packaging or composites, as discussed earlier, it has to be majority plastic by weight for the tax to apply. It is worth clarifying here, though, that doesn't necessarily mean over 50%. So if we had a component which was 40% plastic, 30% paper, and 30% aluminium, as the main material is plastic, the largest single individual material would be plastic, that whole component would be considered plastic for the purposes of the tax. Now, the UK has often struggled in terms of a definition of plastic in legal terms. So a lot of regulation mentions plastics and mentions polymers, but it's not really well defined. So alongside this tax, government have now released a formal definition for plastic, which is defined here on screen. What's worth touching on here is the mention at the end of the exception of cellulose-based polymers that have not been chemically modified. If polymers do not sit within that definition of cellulose-based and not chemically modified, they will be considered plastic. So all other material that is a polymer would be considered a plastic. So looking at recycled plastic. Now, to try and minimize liability under this tax, a lot of businesses are wanting to increase the usage of recycled content or recycled plastic in their material. Now, the definition of recycled plastic here is something that has been reprocessed from recovered material, either by means of a chemical process for chemical recycling or a manufacturing process for mechanical recycling. This is defined really as recovered material. So recovered material would either be pre or post-consumer material that has been collected and recovered as a material input and would otherwise have been disposed of as waste for energy recovery or for landfill or incineration. In terms of the two types of material that we define when looking at the actual recycled content for this tax, it really divides into pre and post-consumer material. So pre-consumer material would be something that has been recovered from a recycling or waste manufacturing process, but it absolutely must have been made into a finished product. So a good example of this might be if I made a batch of plastic bottles and then they never actually ended up going to a consumer because there was something wrong with the batch, but I have made them into bottles, they have become a piece of packaging, that would be pre-consumer material. So arguably that could count as recycled content. Post-consumer material has to have gone through the waste system. So it has to have been defined waste after being used by a consumer. So that will likely be anything that is generated by households or commercial, industrial, and institutional facilities, and in terms of their role as an end user of a product. So when we look at recycled content, it's just worth reiterating here that recycled content under this tax must either be a product that has been made but then not used by a consumer, or a product that has been used by a consumer. Anything else would not count as recycled content. Now, what is worth mentioning as a final point on this slide is that the actual definitions themselves, both the definition of a plastic and the definition of recycled plastic, are not formally set in stone until this regulation comes into play. And HMRC could theoretically amend these somewhat. However, we do not expect that to happen. We expect this to stay relatively stable to allow the tax to work. So how and who does the tax impact individually and as a group? So in terms of impacts, it's important here to split into the direct impacts and indirect impacts. So direct impacts will apply to people who are likely to pay the tax. So this will be the party that will ultimately pick up the cost directly for the liability of the tax. So for non-UK sourced packaging or packaging manufactured outside of the UK, that will be the importer for finished goods which are imported, and the importer for any empty plastic packaging which is imported. And then for UK sourced or UK manufactured packaging, it will be the actual plastic packaging manufacturer in the UK who is the direct liable party. So direct parties will be required to register with HMRC, make submissions on a quarterly basis, and then pay that £200 per tonne figure where they cannot demonstrate 30% recycled content. In terms of indirect parties, now these are businesses who won't pay the tax themselves, but will see the cost appear in the supply chain. And really, that's anyone handling plastic packaging within the supply chain at all. So if I were to purchase something from a UK manufacturer, if they've paid the tax on those goods, it's likely that I will see my costs increase by the value of the tax that's been paid. So we do expect that cost to move throughout the supply chain. So if we were to compare two businesses, business A would be a business who manufactures 200 tons of plastic packaging in the UK using 100% virgin material. So that is then taxable at a rate of £200 per tonne, and they would pay that for all 200 tons because none of it goes under the 30% recycled content. That would lead to a final liability cost of £40,000 for that business. If we then looked at business B, on the other hand, they're importing packaging, so they bring in 200 tons as well of packaging, but 100 tons of it comes with a supplier who's able to demonstrate that they have properly received 30% recycled content into that material. What that means for business B is that they only have to pay the tax on the 100 tons where they cannot demonstrate that. So instead, their liability is somewhat halved, so they will only pay £20,000. So you can see that having access to evidence and having access to information about how you can clearly show that the 30% recycled content is present will allow you to minimize your liability. However, we do expect this area to be quite stringently audited. So it is exactly here that businesses will need to invest in communication throughout the supply chain. There are some non-tax costs to businesses as well in terms of administrative burden. Really, in terms of challenges, this can be set into one-off costs, ongoing costs, and then work to achieve the 30% recycled content. So a one-off cost might be familiarizing or training your staff to get them effectively getting your head around the tax itself, getting registered with HMRC, setting up your reporting processes, and then actually completing tax returns. The ongoing costs would be the completing and filing of those returns, as well as tracking the financial implications of actually making returns and paying the tax itself. Also, if there's any credits that are due for exports, businesses might see cost in terms of getting communication and evidence that the exports have occurred. Finally, on challenges is the actual achievement of the 30%. So businesses will have to determine whether or not, based on the £200 per tonne figure, it is better or worse for them as a business to try and meet or not meet the 30% recycled content. In terms of support, we do expect HMRC to try and deliver a bit of support on this. They have committed to develop clear guidance as well as supporting tools and providing sessions to support businesses. However, we do have to say at this point that the response from HMRC has been relatively vague. We've not had a huge amount of information come through from them. We haven't really seen many tools go live yet, and we haven't seen much in terms of support. So that is really where industry becomes quite key. So there's a massive challenge for industry around understanding recycled content, how we can evidence it, and communicating it throughout the supply chain. And that is exactly where we think the majority of the management of the administrative side of this tax will sit. Now, in terms of liability, it is worth clarifying from the absolute start here that this tax is subject to something called joint and several liability. Now, If, like me, you're not too au fait with the kind of terminology that gets bandied around with taxation, joint and several liability could be a new term. And this is something I must admit I had to look up when the tax was first released. So joint and several liability in this case means that when a taxable party cannot be identified, the entire value chain is considered liable for the tax until the point that it has been paid. So what that means is that if a HMRC are unable to identify in a supply chain who should be the one paying the liability for the tax, the next person in the supply chain, or the first person to commercially exploit the packaging in the UK, will be considered the liable party. So it is important as businesses that you carry out due diligence on your supply chain, both forwards and backwards, to ensure that where you have liability, or where you might have joint and several liability because of being in that supply chain, you're aware of your responsibilities. It also goes without saying here that for UK businesses, the fines can reach upwards of £20,000, and there is also a risk of imprisonment for 12 months or up to 7 years for any fraudulent evasion of tax. So it is very important to get this right and get your liability and the understanding of it correct. So in terms of actually defining and measuring recycled content, we've spoken already about how this can include post-consumer and pre-consumer waste to some extent, but it's worth highlighting here that absolutely and fundamentally, in-house reuse of scrap or regrind is something that cannot be counted as recycled content under this tax. So putting this in layman's terms, quite often we see extruders who will collect scrap and scrapings from their machines and then effectively put it back into the top of the machine for re-extrusion. You cannot count that as recycled content, and doing so would theoretically be considered fraud under this tax. So it's just worth bearing that in mind. Post-consumer for stuff that has come through the waste stream, and pre-consumer for finished products which have come through the waste stream only would be counted as recycled content. Now, the way this is actually calculated is using what's referred to as the mass balance method. So there's a diagram of this at the bottom here. Now, this process is actually aligned with ISO 14021 2016 standard, which is the voluntary standard for self-assessed labelling and environmental claims. Now, when we look at mass balance, effectively what we do is we take the mass of recycled content in the plastics, divide that by the total mass of all plastics, and multiply it by 100. So the calculation itself is relatively straightforward, it is expected that this will be based on production and manufacturing data and records, and likely done on a production batch level. So each batch of material made, you would produce a separate mass balance calculation to demonstrate recycled content. Now, there are a couple of issues here that are worth bringing up. So firstly, we have the issue of rounding. So whilst we know that 30% recycled content by weight is the minimum, what we don't know is what figures HMRC are likely to round that to. So the tax is payable on a per tonne basis, but whether or not that will go down to 3 decimal places or per kilogram or further beyond that is unclear. And so we are hoping that HMRC will clarify that later this year. And then finally, currently post-manufacture testing is not something that's widely available for recycled content in plastics, but it is something that could be a future development. So it is worth bearing in mind here that if something cannot be easily demonstrated to meet that 30% recycled content, government will assume it is 0% recycled content. The tax is very much pay it unless you can demonstrate that you shouldn't, rather than vice versa. So we did have a government consultation, as mentioned, back in 2020, and after this had closed, we had some feedback from them in November. Now, the industry at the time got quite excited because we were expecting a lot more information, and we did actually get a draft copy of legislation. Unfortunately, though, it's just not quite as finished and quite as written out as we had expected. So I will go through here, though, some of the responses from the consultation from government, separated out into each of the individual areas. So that covers the scope, liability, small operators, evidence requirements, exporting, and then returns and enforcement. So in terms of the scope of the tax, there are a few areas that government did clarify. So firstly was cellulose-based polymers. So they clarified that the only material in terms of plastic type which does not fall under this tax is unchemically modified or non-chemically modified cellulose-based polymers. So all other plastic types, biosourced packaging, biodegradable plastics, compostable plastics will all remain obligated and all remain liable under the tax. Now, for biodegradable and compostable plastics, this adds a further challenge in that you can't actually add recycled content because recycled content has to be defined by the mechanical or chemical process. You can't count organic recycling as recycled content. In terms of packaging type products, government have clarified that they intend to include this with the exception of long-term storage. So when we say packaging type products here, we mean items that would be packaging like in their function, but not identifiable individually as a piece of packaging. So if I were to sell sandwich bags or cling film in a shop to a consumer, that currently would not be considered packaging. However, under this tax, it will be liable and will pick up the tax as if it were a piece of packaging. Next up is transit packaging. So this is one of the other very, very few exclusions is any pallets, shrink wrap or transit packaging around imports is excluded from the tax, but only when it's imported in use. So if I were to import a pallet of goods with shrink wrap around the pallet, that shrink wrap itself around the pallet would be excluded. But if I imported a roll of shrink wrap to use on pallets, that would be classed as empty packaging and would be liable under the tax. There is also an additional exemption, and this is probably the main exemption under the tax, for human medicines. So what this means is that the primary or immediate packaging for human medicines designed for consumption by humans is not liable under the tax. So they're going ahead with that exemption. However, they are not extending that to medical devices. It will only be for immediate medicines. The reason for that exemption is that there is some wording within the Human Medicines Directive, which means that recycled content is not something that actually can be used within that packaging. Other than that, no other exemptions are planned at present, and that would include bulk bags for food applications or any larger packaging types. There are no other exemptions other than the human medicines, the imported transit packaging, and then cellulose-based polymers when non-chemically modified. In terms of the actual liability then, government did clarify that the UK manufacturer they would consider to be liable. The first importer as packaging would be liable, and that the actual point of taxation would be after any ancillary processes, but before pack filling. So this question was raised on the back of packaging material that might be cut and pack filled as part of the same action. So if I were making bags of crisps, I might buy a roll of crisp foil, which would be cut and pack filled at the same time. The last ancillary process would be the actual printing onto that crisp foil. So the person I buy the roll from would be the obligated or liable party. I would be considered to buying a finished item from them. In terms of imports, It's once again worth clarifying here that the first commercial exploitation of the packaging by a UK business is the point of tax for imports. With import paperwork, government are keen to say that the consignee on import paperwork is likely to be the liable party. And overseas businesses which are operating in the UK, if they have a UK tax representative, that representative may be liable for the taxation if they are the first party to commercially exploit in the UK. It is also worth touching here on one of the more uncertain requirements of the tax at this point, but something that we once again are expecting HMRC to provide more clarity on. Now, one of the requirements of the tax is that when a business first pays the liability of the tax, so either the manufacturer in the UK or the first importer, when they then sell that to another business, that first transaction they make, they're also required to define alongside the invoice how much tax has been paid on the items sold. That doesn't extend beyond that first business transaction. However, it is quite administratively burdensome for businesses. So there's a lot of concerns about exactly what this will entail. From what we understand, this does not have to be necessarily on the invoice. It can be a transfer of information with the invoice. But once again, we're waiting for clarity from government. And all they've said so far is that this requirement will be for sales from taxpayers, as in the first liable party, to business customers only. And then once again, government clarified that joint and several liability will be applied when someone knows or had reasonable grounds to expect that the tax has not been accounted for. So it's worth doing that due diligence just to make sure that you're aware of your liability. We also got clarification on the mass balance calculation. So that has been approved and they're going ahead with this method. And that will once again be based on a production run. And they also clarified from a due diligence perspective again that where there is a belief on behalf of an importer that their packaging contains recycled plastic, they need to do due diligence and they need to check the supply chain to ensure that there is evidence outside of the UK that recycled content is there, and also that that recycled content itself has come from the right sources. In terms of UK reprocessors, there won't be any requirements on UK reprocessors to be accredited to meet the standards of recycled content. But obviously, as we move outside of the UK, it becomes more difficult to get hold of that information. So once again, good supply chain awareness and good due diligence is key. Now, I wanted to touch on small operators, or the de minimis and threshold, plainly because this is something that will come up quite a lot over the coming year. Currently, the threshold, or the de minimis of the tax, is set at any UK business handling 10 tonnes of plastic packaging per year. So if you handle more than 10 tonnes of plastic packaging, you have a liability under the tax, and you'll likely need to register with HMRC and declare how much packaging you're handling. This will be based on a forwards and backward look system. It's another taxation term that I needed to look up when the tax was first released. Effectively, a backward look would be done on a rolling 12-month basis. So you have to estimate how much packaging you're likely to handle. And if your estimate is between 9 and 9.9 tonnes, so it's close to the 10 tonnes, you need to monitor very closely all of the plastic packaging you handle. And if you go over the 10-tonne threshold, you will have basically till the first day of the second month after that. So you have just over 30 days to register with HMRC and ensure that you're then liable as a tax-paying party. As well as that, there's also a forward look. So if your business becomes aware in any 30-day period, they're going to import or manufacture greater than 10 tonnes of plastic packaging, they must immediately look at registration. And from the date that you become aware of that, you effectively have an immediate registration, but within 30 days, it's expected that you will be registered with HMRC. So in terms of evidencing recycled content, this is probably one of the more difficult areas of this tax, in that there's a lot of financial incentive to provide evidence of recycled content, but it's not always the easiest to get hold of. So government have clarified that there's a range of areas of evidence types they approve of. There is also actually a HMRC website page now, which has more information on each of these categories here. So please do go onto the .gov page on HMRC, or just Google plastic packaging tax evidence types, and you'll be able to find the full list on here. But this is the core list of categories, and I'll touch on each of them individually. So first off, we have product specification. So if you have clearly in a product specification that it must have or has X percentage recycled content in, that would in some manners be considered partial evidence of recycled content. When looking at contracts, if you're contracting out that 30% recycled content, that it must be in that packaging, that would also be considered supporting evidence. Interesting thing there is you would likely need to do spot checks to make sure that that 30% is being accounted for and is being included. In terms of production, certificates of production and certificates of conformity are also expected to be allowed, once again as supporting evidence, and that will very much depend on the commercial relationship you have with either the manufacturer or the raw material producer. Some businesses will have accounting systems which will allow them to produce information on this directly. Certainly, any converter may have access to a system which allows them to pull out recycled content versus non-recycled content going into a process. If you do have access to that, you can use that as evidence. There are going to be a range of accreditations and international standards, such as the ISO 14021, which we've already touched on, which will be a good method of meeting evidence requirements as well. Quality assurance audits are expected to be something that is picked up by due diligence on behalf of businesses, and that could be directly or through third-party suppliers. And also, sales and purchase invoices is a good way of demonstrating that material you've been sold or material you've purchased or sold yourselves has a certain amount of recycled content. Now, finally, in the tax document, it mentions Environment Agency accreditation or equivalent approval from other bodies. We do expect this to be mostly third-party managed. The Environment Agency do provide accreditation of recycling facilities, but they don't necessarily provide accreditation that material contains recycled content. The absolute most important aim here in terms of evidence is that just one piece of evidence is unlikely to be enough. Government and HMRC have clarified that you will likely need multiple of this list, and really it's the more the merrier in terms of providing this information. So you want to have as many of these boxes as you can tick and as many different evidence streams as you can gather. So looking at the actual returns, the registration, and ultimately, unfortunately, the enforcement side of things, from the 1st of April, we have to be clear, any UK manufacturer or importer of plastic packaging that's handing over that 10 tonnes per year must register with HMRC. And once they're registered with HMRC, they'll have to provide the below information. So you've got the basic business information, so name and address, VAT or corporation tax number. Then you'll have to provide information on the tonnage of packaging that you've handled in terms of plastics over the last 12 months. You will have to assign a responsible person at the business who will be required to oversee that the plastic tax requirements are met. And you'll also be required to provide addresses of sites where packaging is either manufactured or imported into. Bank details will obviously have to be on there as well for the purposes of payment and of the tax and receiving of any credits. And finally, there is a requirement on there to provide a packaging recovery note producer registration number if the business has one. So that registration number, or an NPWD code as it's referred, is something you will likely be familiar with if you have an obligation under the PRN or producer responsibility for packaging waste system. But if you don't, it's not something you'll need to worry about. However, it is likely that having one will allow you to have access to information that will benefit you in terms of proving how much packaging you've handled. Now, group companies will likely want to put in one single registration, which they're absolutely entitled to do. You can register under a holding company, but the threshold will be shared throughout the entire group if you do that, rather than individually by each company. So, in order to make the registration as smooth a process as possible, HMRC have confirmed that they are making a registration website, which will, in theory, be able to handle quite significant amounts of traffic. And registrants will have until the the 30th of April next year to register on that website. Now, that website will likely be the core place for making submissions and making returns, but exactly how that will operate in practice, we have yet to see. That is not something that HMRC have been very public in their development of. In terms of the registrations themselves, it is going to be a quarterly submission. So each quarter, you'll need to make a submission. Even if you've not handled any packaging that quarter, you'd still just have to declare nothing. And even if the packaging you've handled is not liable, you'd still have to declare what you've handled and that it isn't liable. Those quarterly payments are going to be due on the last working day of the month after the end of each quarter. So it's, relatively speaking, 30-day payments from the end of the quarter. And so as an example here, the April to June quarter, the first quarter of the tax in 2022, the payments would have to be made by the 29th of July 2022. So that'll be when the first set of quarterly payments goes out. In terms of the actual filing of returns and getting these back to HMRC, as we've mentioned quite a few times, but it is worth reiterating, it must be a quarterly submission to HMRC. So it's not just going to be an annual submission, it will be each quarter. And alongside that, if you actually have a liability under the tax, you'll be required to return details of how much tax is due. Now, the way that will be calculated is by saying what tonnage of liable packaging you've manufactured, if you're a manufacturer, what tonnage of liable packaging you've imported, if you're an importer, and then by multiplying those tonnages by £200 per tonne, what the total tax liability of your business has been for that previous quarter. If you have exemptions, such as the medical packaging, the non-liable packaging, exported packaging, or you have more than 30% recycled content, you still have to submit this information. Alongside that, you'll submit the tonnage of the packaging that you've manufactured or imported, which has then been exported, the tonnage of packaging which you've manufactured or imported, which has more than 30% recycled content, and the tonnage of any exempt packaging, such as medical packaging or non-chemically modified cellulose polymers. It's also worth mentioning here in terms of exports that a credit is due or can be liable to be due for any packaging which is exported. And if you export it in the same quarter that you would report it, you can net it from your obligation for that quarter. However, if you export it in a different quarter and you've already paid the tax on it, you would have to apply for a credit. So looking at this in terms of a flow of packaging material, we can see that really there's two degrees of entry to the market. So for UK packaging, there's the converter that manufactures, and for non-UK packaging, there's the importer, which could be either the pack filler or the retailer or wholesaler. So the tax point applies for the converter at the point that packaging is finished, in terms of its last process has been done on the packaging. So you can see that tax point will happen between the converter and the pack filler, or the converter and the retailer wholesaler, depending on who they're selling to. For imports, however, the tax point occurs at the first point that it enters the UK. So that will, if the pack filler or retailer wholesaler are importing directly, it will be them that pays it. But if they're providing materials through a third party, it will be that third party that will be the one that pays the liability. So this really helps to demonstrate how complex the supply chain can become. This is just with 1 degree of separation. We expect that in reality, there'll be multiple tiers within this. So it is worth doing that due diligence and understanding your supply chain as much as you possibly can. So in terms of exports, you can get a tax credit when you've exported packaging. However, it will only be liable, the credit, to the original party who paid the tax. So if I were to manufacture some packaging in the UK and then sell that onto a business who exports it, I can only get hold of the credit if they tell me that they've exported it and they prove that. If they want the credit, they can't get it themselves. They have to come to me, tell me that it's creditable, I get the credit, and then I can pass on the cost saving to them. So it is worth mentioning that that supply chain awareness and that communication will absolutely have to go in 2 directions if you want to have relief for exports. Transport packaging, so that shrink wrap around pallets, etc., won't be relieved from export. So it's only the core packaging that will be. Now, there will be a deferring period for this, so you can have up to a year to get back a credit for exported packaging that you've paid liability on. And as mentioned, when it happens in the same quarter that the material picks up the tax, you can in fact net it from your submission to make the submission and the credits easier. So that brings us to the end of the main part of the webinar. I believe we do have some questions which have come through. So if I read out the questions, David, are you okay to jump in?
Yeah, absolutely.
Perfect. So the first question we've had is how much polystyrene will be lost as a result of the packaging tax?
Okay, so in truth, we don't know the answer to that, but we are aware that many UK businesses are trying to move away from polystyrene packaging. There is even talk that this material may be phased out and replaced by more sustainable plastics, which, polypropylene is viewed as a sustainable product, even though it is plastic. But the problem with polystyrene is that it's high on the exclusion list because it has issues with recyclability in terms of weight, return, and the ability to recycle the product. So I don't think I've been able to answer that in great detail, but that's the issue with polystyrene packaging.
No problems, thank you. So the next one is, does this tax affect industrial paper sacks with PE liners? And if so, is the tax levied over the entire weight of such a bag?
Well, as it suggests, the plastic tax will affect only the PE liner. So you will need to differentiate between the weight of the paper sack and the weight of the liner, paying the tax only on the liner element. So that's going to have to be something that you effectively put together when you produce your invoices for customers to show the element of tax paid on that, just the liner.
Perfect, thanks. And I think I know the answer to this one, but I'll pass it over to you, David, as well. Do you still have to pay this tax if the packaging is sent for recycling?
Simple answer is yes. The only exception to the tax is, as you've suggested, Martin, to provide a product with at least 30% post-consumer recycled content contained therein.
Perfect. So this one's a bit more specific. So how do you see the impact of this tax on imports in the UK of high-grade FIBCs used for food and pharma?
Well, there are no exceptions to the tax where bulk bags are concerned. So the food and pharma sectors are very much affected by this tax. The food industry is reliant on the use of bulk bags throughout the supply chain. And we know that these bags must be manufactured from 100% virgin polymer. So even if an RPP product exists, it's unlikely that they would even use an RPP product. Comparing prices to bags that were manufactured 10 years ago, realistically speaking, the price is still very, very cheap. So even when you add the tax element onto today's price, relatively speaking, you still have a cheap product. It will cause food grade customers to look at packaging designs, but we do not expect to see the numbers of bags used declining in the medium to short term. I hope I've answered that one.
No, that's perfect. Thank you. We've got another FIBC one here as well. So just wanting a bit of information about the varieties that the tax is applicable on, what testing method might be used for finding the RPP percentage, and then yeah, any more information you can give on that.
Okay, so as you've already said, Martin, the tax is implemented on trust. There are no current test methods for determining recycled content. I'm sure that will change, but at the moment there isn't. And this is why it's extremely important to work with a trusted supply source. If you are supplying tax compliant materials, HMRC will investigate you sooner or later. If it's found that the supply chain is, say, not robust, and there is doubt, you will be liable for back taxes. And the possibilities of custodial sentences for directors for the worst offences, which I'm sure will only be deliberate fraud, but it's still, you know, the top end of the issue. It must be emphasised again that if it can't be proved that the end user of the product has not carried out due diligence, then they too will be liable for back taxes. So our customers must rely on us to make sure that due diligence is done. Otherwise, they may be liable for the tax going forward, especially if the supplier of the material goes bust as a result of not being able to pay the back taxes. All of the money raised from this new tax will be going into the government coffers, and they'll be going to the UK coffers rather than European coffers. So HMRC staff will be checking to make sure that compliance is met. No doubt about that. There is no commercially viable RPP available on the market yet. The little volumes that are available in Europe, and they are attracting huge demand and a very high premium. They're also inconsistent, and the quality of the original source is erratic. So there's a lot we need to do to put this right. And sadly, I fear our industry is not geared up as yet to handle RPP. For the benefit of bulk bag manufacturers listening to this webinar today, the emphasis on RPP, the content has to come from post-consumer waste, not post-production waste. Sorry if I've waffled on a bit there.
No, that's brilliant. It's important to get, exactly like you say, it's important to get all of that in there. So we've got a few more. We've got so in terms of the agency related side of things, who's going to actually ensure and issue certificates for recycled content and for liability?
Okay, again, well covered within the webinar itself, that the certification will be issued from the producers. So for example, if you're an importer of bulk bags from, let's say, India, and the tax that is tax compliant, the documentation supporting this will need to be provided by the original manufacturer of the goods. This will then be lodged as evidence for MHRC. Her Majesty's Revenues and Customs will then be able to randomly challenge claims, and if the supply chain does not stand up to scrutiny, then it will be deemed to be fraud. All of us within the industry are responsible to our customers to ensure that our claims for the supply of RPP materials can be backed up with data to support this claim. Can't emphasize enough, our due diligence in this area must be very robust before you accept RPP products as rare.
Brilliant.
I've answered that one too.
Yeah, no, that's perfect. And this one I'll let you go back to as well, if that's all right. So are there any kind of sustainable circular polymers that could be used for extrusion that also might be countable in terms of liability or avoiding liability under the tax?
Okay, so not really fully understanding the question, but I'll have a crack at it. Theoretically, if the recycled proportion of the RPP or the recycled material of 30% is made up of multi-polymers, then the answer to that question is yes. I think the problem we have is, in the case of the bulk bag industry, extrusion lines are designed to extrude polypropylene tapes from 100% virgin polymers. Virgin polymer produces strong, clean, and consistent tapes. Introducing post-consumer plastics will affect the blend of the materials. It will make the tapes weaker, and ironically, this will mean we'll have to produce heavier fabrics to compensate for strength, because strength is very, very important in the bulk bag world because of safety, which is absolutely paramount.
No, that's perfect. Thank you. So yeah, I think the issue there you have is this, and I think a lot of industries have got that same issue of trying to put the recycled content in. It's not a straight swap, and it never will be. So it's trying to weigh the checks and balances somewhat. So before we summarize, I do think we've got time for a couple more questions. So I'm just looking at what else has come through the question panel. I'll probably pick some of these up. I'll give you a rest, David.
Thank you.
So we have got. So if I understand correctly, a plastic bag manufacturer using their in-house plastic waste or scrap will not qualify as using recycled plastic. Correct. So that would not class as recycled content. If you've actually made bags which then go on to become waste, yes, that would be that pre-consumer waste. But any scraps and scrapings from your machine, you cannot just put it back in and count it as recycled plastic, because otherwise, if I wanted, theoretically, I could run an extrusion line cold just so that I can claim that I've put everything through and it's all scrap, then put it back in again hot, and then claim that it's 100% recycled content. So HMRC have got to take a stance somewhere to try and minimize that. We have a specific question here saying, what about pet food? Well, unfortunately, the exemptions, as I say, they only apply to human medicines. So the normal food industry, pet food industry, anywhere else are not currently being considered for exemptions. We've raised this from HMRC, but unfortunately, they're not massively interested in adding any further exemptions. What have we got next? So there's a question here about polypropylene being recyclable and whether there's a need for it to have recycled content if it's recyclable, and that will apply to other materials. But I think it's just worth clarifying here that the aim of this tax, in terms of the broader waste management landscape, is about pushing recycled content across the value chain. Recyclability does not sit within this tax. That sits under extended producer responsibility for packaging waste, which will be coming in from 2023, which will be about producers paying for the cost of the recycling. This is more about the actual recycled content, which is a separate measure, and that's why it's being dealt with by the Treasury rather than Department for Environment, Food and Rural Affairs, or DEFRA. So I agree that there is a trade-off there, environmentally speaking, and certainly carbon speaking, you likely will do as well. But from the purposes of these policies, it's worth separating the two. One of them is a tax, and one of them is a producer responsibility system. So what else do we have on here? Well, it's two questions in one on this one. So it says, you stated that plastic recycled as pre-consumer waste must have originally been made into a finished product. However, our interpretation is that it must have undergone a manufacturing process. So a semi-manufactured plastic product could be. Yeah, I think in terms of, I'm trying to summarize this in terms of as simplified a mechanism as possible, and where that line sits in terms of a semi-manufactured versus a fully manufactured final product, I think is something that is up to interpretation. The important thing to bear in mind, and the important thing to consider, is separating that from your material scrap. So the aim must have been that it was meant to be made into a product. So yes, you might have a production batch which has failed, and if a full batch has failed, you could argue that that would count as a pre-consumer waste and could be recycled, but it would need to be dealt with as material for recycling. So it would need to go through a recycling facility, be properly recycled for that to happen. So the second question there is the time limit. So around the 12-month cut-off date from the tax that have been paid. Yes, so that is something that's been proposed. Like I say, the regulations are not yet final, so it's all still theoretically subject to change. But we, as I mentioned, expect in Q3 this year for a lot more clarity to come from government in terms of the additional areas that we haven't got coverage on yet. So just conscious of time, I think we probably will finish questions there. So it's just over to you, David, if you want to summarize.
Okay, so thank you, Martin. I just wanted to not dwell too much on this, but we've got to understand from within the industry that this new tax is only the beginning of a huge change coming to the plastics world. You mentioned ERP, which is extended producer responsibility. That's on the horizon, and that tax in itself will bring seismic change to the cost of the products we supply. But that's a subject for another webinar when the rules become clearer, because they're still very much in the mire. We also have to remember that bulk bags are an excellent concept and remain an incredibly cheap transport medium. There is a huge demand for the products we supply, but we do have to start taking responsibility for the industry. We cannot continue to produce year on year huge volumes of packaging materials without accepting some form of responsibility. Changes will force us to take control, or we will have to suffer the long-term consequences. I think all people within the plastics industry need to be aware of that. And the final point I would like to say is that we've talked today about 30% recycled content, but this is only the start. We know that once that 30% recycled content has been established, government will push that up to 50%. So in order to remain compliant at some stage, that content will move from 30 to 50. That's a huge challenge for all parties. And can I say that the answer, I believe, really falls into the guys that produce the PP granules. You know, we can't continue just to produce 100% recycled virgin polymer. We've got to find a way of having a product that's stable. The other thing is that the £200 per ton rate, which has been set, that will increase as well. There's no question about it. Europe have set theirs at €800 per ton. So we know that this is the beginning of a big change, and we've got to accept responsibility. I'd like to finish there and thank Martin for all your help and support on Comply Direct in developing this webinar. And thank you everybody for joining us today. Please feel free to contact me if you have any questions on the subject. Full transcript of the questions and answer session will also be made available to the attendees today. And thank you for taking time out of your day. I wish you all a very pleasant rest of your days. Thank you.
Thank you very much, David. I'll end the webinar there.
Thank you, Martin. Bye-bye.